Hey everyone, welcome back to Corporate Decoder, the place where we unpack corporate filings and figure out what is really going on behind the fancy words and numbers. Get ready because today we are diving into a report that has some interesting moves happening behind the scenes with ISRL Acquisitions Corp. Make sure you are subscribed and join our Discord community linked in the description below to keep the corporate conversation going. So ISRL Acquisitions Corp, or ISRL as they are known, is up to something. This report is all about some new agreements they have entered into and why they are important. It looks like they are working on a business combination, which is basically a merger or acquisition. Think of it as two companies joining forces to become one bigger entity. The main players here are ISRL, a company called Gadfin Ltd, and a financial advisor named BT LLC. It seems like ISRL needed Gadfin's agreement for some of these new deals to go through, and Gadfin had some leverage. One key detail is about something called a deferred underwriting commission. Basically, BT was expecting to get paid a certain amount of money from a past deal, but now they are agreeing to waive that payment in exchange for a new advisory fee and some stock in the future company. This is a big deal because it means ISRL is trying to streamline its finances and incentives. So BT isn't just walking away from their expected money without getting something in return. They are becoming a capital markets advisor for ISRL. Their job will be to help ISRL with market conditions and strategy, but they won't be directly selling or pushing for the deal to happen. They are getting paid $500,000 in cash, which will come from the money ISRL has put aside for these kinds of deals, and they will also get 100,000 shares of ISRL's Class A ordinary shares. This is a pretty significant compensation package for their advisory role. There is also a mention of a new company called Gadfin Holdings Ltd, which will be the new pubco, or the combined company after the business combination. It seems like Gadfin and ISRL want to make sure that this new company has insurance to cover any potential claims made against it by BT. This shows a desire to protect the new entity from future liabilities. Now let's look at the securities involved. ISRL has units, which are like bundles of different types of shares and warrants. Each unit comes with one Class A ordinary share and one redeemable warrant. They also have separate Class A ordinary shares and redeemable warrants. These are the building blocks of the company that investors can buy and trade. The fact that they are listing these on the Nasdaq Stock Market LLC shows they are aiming for a certain level of visibility and access to capital markets. The warrants have an exercise price of $11.5, meaning if you hold a warrant, you have the right to buy a Class A ordinary share for $11.5. This is important because it sets a potential future value for these shares. The company is checking a box to say they are an emerging growth company. This means they have less than a certain amount of revenue and are not subject to some of the stricter reporting rules that larger, more established companies have to follow. This can give them some flexibility as they grow. This section is about the actual agreements being made. It details how ISRL, Gadfin, and BT are structuring their relationship for this business combination. It outlines the concessions and agreements made by each party to move forward. One of the most interesting parts of this filing is how BT is forfeiting its right to that deferred underwriting commission. This is a clear signal that circumstances have changed, and they are willing to adapt their compensation structure to make this deal happen. They are essentially trading a guaranteed payment from an old deal for a new stream of income and equity in the combined company. Like most corporate filings, there is a section on forward-looking statements. This is basically a legal disclaimer. They are saying that the statements they are making about the future are based on their current expectations and projections. However, they are warning investors that actual results could be very different due to a lot of risks and uncertainties. They list a whole host of potential problems, from economic disruptions and changes in the competitive environment to unforeseen events like pandemics or geopolitical conflicts. It's a reminder that the future is never guaranteed. They are really emphasizing that the success of these future plans hinges on the successful completion of the business combination with Gadfin. They are highlighting the risk that if this deal doesn't go through, or if shareholders decide to redeem their shares, the company might not have enough money to operate or grow. This is a common concern with these types of SPAC deals, where a shell company like ISRL goes public to merge with an existing business. There is also a mention of submitting a registration statement on Form F-4 to the SEC. This is a document that contains detailed information about the proposed business combination and will be sent to shareholders for their approval. When it is made public, it will be important to read that document carefully. This part talks about who might be influencing the shareholders' votes on this deal. It names Gadfin, New Pubco, ISRL, and the sponsor as potential participants. It is important for investors to know who is pushing for the deal and what their interests might be. And finally, a clear statement that this report itself is not asking for anyone's vote or money. It's just providing information about the agreements. They are making sure to say that any offer to sell or buy securities will only happen through a proper prospectus as required by law. Now, for my take on all of this, what we are seeing here is ISRL Acquisitions Corp actively working to finalize a business combination with Gadfin Ltd. The key move is BT waiving its deferred underwriting commission in exchange for new advisory fees and future equity. This signals a willingness from all parties to compromise and move forward, which is a positive sign for getting the deal done. The risks are clearly laid out, and that is a good thing. The company is being upfront about the uncertainties, especially around shareholder redemptions and the overall economic climate. The success of this venture heavily relies on the business combination going smoothly. Without it, ISRL could face significant financial hurdles. Overall, the direction seems to be focused on consolidating and moving forward with a clear strategy. The company is trying to align incentives and reduce potential conflicts. However, the success is still very much dependent on external factors and shareholder approval. It will be crucial to watch how this business combination plays out and whether Gadfin can deliver on its promises in the combined entity. Alright, that is our breakdown of ISRL's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.